right, so big news today on Custodia Bank and really what this might mean for the Bitcoin market overall. We'll dive in deep. My name is Paul Barron. Welcome back into Tech Path. Before we get started, if you're thinking about custody, maybe you want to go the route of maybe a Custodia Bank, but you could also go the route of self-custody, and the route to take with self-custody is Tangem. Make sure and check their website out. Just go to tangem.com. You can learn a little bit more about their cards and how they work with a very slick app. Of course, this chip in the card generates a random private key, which never gets exposed. One of the best tool sets out there. The cards establish a secure connection over to your app, and this is a great way for you guys to get into self-custody. And they make it super simple. You can go in, order these. These are all biometric, obviously tied to your app. You can swap, buy, sell, and earn coming soon over with the Tangem card. Make sure and get the 3-card special because that is the way to go for backups. Use our link down below. It's going to give you an additional 10% off. All right, so let's get into the news. I want to jump over to Custodia Bank's Twitter account. You guys should follow this account. This, of course, is Caitlin Long. And this is the point that they're hitting in right now. As a non-lending bank, we offer integrated Bitcoin custody and US dollar services, not FDIC insured, just so you guys are aware, under one roof, which simplifies user operations and reduces risk. We recently earned approval from the Wyoming Division of Banking. So they're going to go live with their Bitcoin custody service, along with some other states. I'll break some of those down as well to give you guys kind of a lineup on that. Things that you can do within it, just kind of a couple of highlights here about Custodia. Business services and customers such as digital asset businesses, fintechs, banks, corporate treasurers, trusts, pension funds, endowments, foundations, startups, etc. This means that it's not retail yet. So if you're in any kind of entity that essentially is a business organization from an LLC on up, you'd be able to utilize this service. So that's one thing that, whether you like, don't like, my guess is they're probably going to make it available to other customers in the future, but of course they'll have to eventually be part of the Fed, which is not necessarily the case. Let's go over to this first clip. This is Caitlin Long talking about why Wyoming was the best place for this.
Wyoming law provides customers with clear legal title, and that's very important to digital assets. So at Custodia Bank, these digital assets remain with the customer, and you're just like a custodian.
Yeah, that is the legal structure, and it is important to give some historical context. We can go back to the notion that a bank was just a safekeeper of property and that's it. And they would charge a fee for safekeeping the property. And so when you see somebody come to the market like Custodia, which is the first, I think, Wyoming Speedy Bank that will be offering digital asset custody, Kraken Bank is coming close on our heels as well. We both got our charters in the fall of 2020. It took us 3 years in both cases to get ourselves open with digital asset custody. And part of the reason is that both of us built our own custody platforms.
All right, so just so you guys are aware, there is a hierarchy of how these banks are put together. You have the traditional Fed-funded banks that have FDIC insurance out there, typically the banks that you work with every day. And then there is this class that is developing digital asset management. The one thing that she's talking about is this one-to-one relationship with Bitcoin or the digital asset itself, because that gives you the right to that asset versus in a bank, you're getting that fractional reserve concept. You put in $10, they loan out 90. Those are the kind of models that have been in banking for quite a while. So it's interesting to see, and she even mentioned Kraken Bank, others that will most likely take this into, I think, other states, starting to flow out a whole new way of digital services that you'll be able to hold within banking organizations. Then it will boil down to the trust level that you have with those companies and those individuals of being able to hold your digital assets. Because remember, these are not FDIC funded. So just be aware of that. So when you look at the customer base, who are they targeting? Listen in.
Yeah, so the customer base is businesses only. That's what we're chartered for. We technically have the right to do customers with high account balances as well, but we're not set up yet to do individuals. So we're serving business entities only. It has to be a bona fide business, but it could be an investment business, a multi-member LLC, for example.
All right, so businesses only. She even mentioned multi-member LLC. So that's likely for some of you guys watching out there. I would check and see if single member LLCs would be even applicable. And there is a reason why. I'll explain that here in the video here in a second. You'll notice there that they have some qualifications. They operate as Custodia Bank Inc. in these states. These are the yellow states. So if you see your state on there, that's Custodia Bank Inc. And then they operate as Custodia Digital Services Inc. in the blue states, which are these light blues like Texas and Utah, et cetera. So that's, maybe there is a variation, and then the states, of course, grayed out, are not available right now. So this is most likely the difference of being able to hold digital assets and cash is my guess. And I'd love to get, Caitlin on the show. So Caitlin, if you're watching this show right now, give us some love. We'd love to have you in to really explain the services, how this might really affect Bitcoin and other digital services in the future, and what maybe could be happening to the banking system here in the US. I think that's the bigger narrative here. I also want to go over to another clip. Actually, before we do that, I want to go over to some of the PDF. The custodian focuses its energy and attention exclusively on safeguarding the private keys that correspond to the customer's deposit assets or address. So assets are not moved and cannot be pledged or rehypothecated to another party for any reasons, nor are these assets moved internally by the custodian. Simply meaning that they cannot do any of this shenanigan stuff that's been done by a lot of these names that you will recognize out there. I won't even say them, but the point is that they can't do anything with your asset. It's your asset. They're going to be taking a fee for holding that asset, and that's basically their revenue model. Pretty simple. In fact, that's used to be the way banks actually operated. And this one right here gets into some other elements that I think you would want to be aware of. And this is the Wyoming bailment law provides protections that prevent customer assets from becoming part of custodian's bankruptcy estate in the event that custodian were to fail. Simply meaning, in a lot of cases when a company goes bankrupt, any assets being held on those balance sheets become the property of that company. So this bailment law that Wyoming has protects you as a fund holder or a Bitcoin holder of your digital assets to not be able to have to go through bankruptcy proceedings. It's your asset. You don't have to go through any of those kind of crazy things, which is what's happening right now with, things like, Celsius, et cetera. Many of those have already kind of gone into that. Right? Wyoming's digital asset custody rules require proof of reserves and proof of control of the reserves by what they call these speedy banks, SPDI. So again, these are being regulated by Wyoming. So most likely, I think we're going to see other states. I think maybe Florida could be another state that could start to accelerate some of these kinds of digital asset holders. The access to which not immediate, this is something if you're storing your asset there, okay, because they're storing these offline in cold storage. So the access to which is not immediate because the custodians must execute both technical and operational process to access the coins from cold storage. The same is true for segregated custodians, which must execute withdrawals directly from each customer's UTXO. And these are not immediately available for transactions. So it's going to be a little bit slower for you to get funds out. But the fact is you can get them out. But the point is, it's kind of like having your own security vault, so to speak. So if you are holding large assets, like maybe what companies might be doing on their treasury, then this could be one of those, could really open up the opportunity here for businesses to hold Bitcoin. You can also get insurance for custodied digital assets. This will be baseline coverage plus the ability for customers to obtain more coverage. So my guess on this, without asking custodian, I'd love to get them on the show to talk about this, is that this would be maybe like a FDIC thing where you could buy your own insurance as opposed to getting insurance automatically through FDIC if you were to see that for US dollars in banks. So that is an interesting service, because I think we might see that starting to make its way into a lot of these digital asset management services in the future, is insurance for these custodied assets. So definitely a very intriguing offer, I think, with what Custodia has been able to get launched under the state of Wyoming and available in a lot of these states, as you saw there, in terms of being able, if you have a business, you can go ahead and get involved in this. So other things there I want to get into is how this affects other players in the market, because there are a lot of companies that are actually out there holding digital assets right now as a service. What does this do to their business? Listen to what Caitlin had to say about Fortress.
We're not relying on third parties. A third party in the tech world is a security hole. third-party providers were attacked, and some Bitcoins were stolen. That just most recently happened at Fortress Trust in the last month.
If you guys remember the situation with Fortress, this was Swan coming in and talking about this. Swan client coins are insured in cold wallets, and BitGo did not move to the reported incident at Fortress. So you have to be aware of these third-party exposures, which is intriguing. That does remove a potential risk factor here. And I know we're talking about things, well, gosh, Paul, just hold it in Coinbase or hold it in there. If maybe many people might say, yeah, I trust that. But for businesses, what they're looking for is treasury holdings. And I think this is going to open up into high net worth individuals and, businesses, even small businesses that are wanting to get exposure and hold direct assets as opposed to going through ETFs. The question will be is how do ETFs compete with this, especially in digital services? The key here, I think, will be how fast Custodia starts to expand the digital assets in which they hold, which will be interesting for sure. This is getting into a little bit more about what are the services they might offer. Listen to what Caitlin had to say about Lightning.
It's getting to the point where you can run a Bitcoin node on a phone. And I think the Lightning Network, most folks will end up running Lightning nodes on their phone as well, because that's how you pay for a cup of coffee. Whereas I think base layer Bitcoin, rightfully so, is evolving into the FedWire equivalent of the US dollar system. It's the high value transfer system that costs more money to move but settles fast. Whereas the Lightning Network is low value, high frequency payments network. And it's a second layer network built on top of Bitcoin. I'm a huge fan of both of those.
All right, so good to see. I think she's definitely on board with adding more services to Custodia. And that's good because I think it will open up opportunities, whether you believe in, projects like that or not. The point is that you're going to see more expansion into the digital asset services area in structured finance around banks. Eventually, guys, I think this eventually all makes it into traditional banks. Now, do you get the services and the fees and that white glove, expertise? Maybe not. Maybe there is a great opportunity for banks like Custodia, these speedy banks that could really open up a whole new area of market, I think, in terms of what digital assets might be in the future. So definitely one to watch. Other things that are happening right now, Cathie Wood's ARK is selling 3.8 million in Grayscale shares, snapping up around 5.6 million in Block. Now, what does this mean? I think the key here is that Cathie Wood is starting to look at some alternatives to Bitcoin. We just did a video on this, so go check that video out because there's a lot of moves that ARK is making that are intended to go into some other assets within the digital ecosystem around crypto. So it is something to be paying attention to. I think you kind of have to just watch this stuff in plain sight. Why is that important? Because if Cathie Wood is in fact moving to an ETH ecosystem, would Custodia or someone like that offer ETH? Listen to what Caitlin had to say about that.
We have the ability in our business plan to do a couple of additional things. One is to provide custody services for Ethereum, which we've not built yet, and also a stablecoin.
All right, stablecoin. Remember, Wyoming's got a potential stablecoin coming. And then, of course, you have the potential for stablecoin usage, whether it's USDC if we get regulation, even though I don't know that she might fall under that with the speedy rules. I'm not sure how that would apply. But the point is that ETH is potentially also a target in terms of digital assets. Now, when you think about the ETH ecosystem, and I'll go back to Cathie Wood's scenario, is looking at her holdings. And I want to kind of go into ARK's holdings here. We'll just get into a little bit of these. You can kind of see here, Coinbase ranked number one. These are weighted on ranked on weighted assets. And then all the way down here, you'll start to see Square and then DraftKings, which of course, remember, DraftKings has started to move into what they're doing on Polygon, obviously Ethereum. But DraftKings, of course, absolutely skyrocketed their revenue numbers. If you look at some of the numbers that they were posting here, I mean, this is the full year sales outlook from 3.6 billion, 3.2, 3.7 billion, up from its earlier 3.46. Earnings, this is, of course, is before EBITDA. And then you look at their loss of 95 million to 115 versus the previous estimate loss of 190. So they're gaining ground. And with that, and you look at their current chart, I'll go over here to their chart. This is their, since really year to date, up 232%. DraftKings now trading at $36. So this is another one to watch. And I think when you look at what has happened around the Ethereum ecosystem, you open up the idea of banks like Custodia and others possibly coming to the game, Kraken Bank, etc. Man, this could really get exciting, I think, for a lot of digital asset holders in the future. I'd love to get you guys' feedback. Do you think this changes your strategy on how you hold custody your Bitcoin if you are, and we'll call you a business owner or maybe, a professional that is doing digital asset trading on, maybe not necessarily an advisory level, but to the next level where you're starting to hold a lot more of these kinds of tokens? Would Custodia be an opportunity for you? Let me know some of your thoughts down in the comments below. If you guys are not already in the Diamond Circle, make sure and jump in. It's where we do additional podcast over there. You guys love that. Those podcasts have been doing really well. I've got a new show over there called The PB Show. You guys can catch my full podcast there. Kyle Wilson does his Web3 and gaming show over there. So it's additional content for you guys that we don't put here on the YouTube channel. And of course, if you want to catch me out there on X, it's at Paul Barron. Catch you next time right here on TechPath.